It is 9:28 a.m. Pacific Daylight Time. It is the 16th day of October 2025, and this is episode 1191 of Bitcoin and Coffee Shop. Yep, got a coffee shop. First ever Bitcoin payment on Square. We will get all into it. Trump confirms that we're in a trade war with China. You're here because of all this and more. It's all the news that you can use about Bitcoin and more, especially in today's world about more macroeconomic stuff, which we will get into. We're also going to talk about gold. We're going to talk about this fat finger print of $300 trillion. It's not exactly what you think. We're also going to be talking about California a little bit. Tether stepped up to the plate and has donated quite a bit of money to open source development, but Jack Dorsey just doesn't think it's quite enough, and they're probably going to need a list of burn centers to get, after Jack's tweet reply on that. It was kind of funny. California is in the news. The UK is in the news. OKX is expanding their custody partnership with a huge bank, and Strive and Similar Scientific's deal may be on the chopping block. We'll have to see. But first, coffee, because everybody loves it, unless you just don't like poison bean juice. All right, so Bitcoin Magazine, Micah Zimmerman's got this one. First up for the day, Compass Coffee Shop debuts first ever Bitcoin payment on Square Terminal in Washington, D.C. A customer just bought a coffee using Bitcoin at Compass Coffee. This reportedly marked the first ever Square terminal in the world to accept Bitcoin. The pilot launch, showcased during DC FinTech Week, was made possible through Square's new Bitcoin payment integration. According to a Compass Coffee X post, the system worked seamlessly across multiple Bitcoin wallets, demonstrating the power of open payment standards and the Lightning Network. You know, because pausing just to say, if you remember Roger Ver's major argument about Lightning and Bitcoin, especially back in the 2017 days before Lightning, Roger Ver was all about coffee, and that Bitcoin, because of reasons, you couldn't buy coffee with Bitcoin, and that was quite literally one of his three major prongs in his attack on Bitcoin that resulted in the fork to Bitcoin Cash. But the other one was Lightning. It just doesn't work. I've never been able to make it work, said Roger Ver, but no, it did work. He just was making a mountain out of a molehill. And now Lightning pretty much is almost flawless. I mean, are there still issues? Of course there's still issues. This is all new tech. It's, I've had failed Lightning payments. So what? I try it again. And if it fails, then I try it a third time. And within the course of a minute and 2 failed payments, I still get my payment through. I honestly don't see what the issue is. But continuing on, Compass Coffee, a beloved DC chain with 27 locations, hosted the demonstration and invited lawmakers and fintech leaders to see the technology in action. Quote, cannot wait to see this come to Square devices worldwide soon, the team posted on X. Square recently announced the launch of Square Bitcoin, which is going to be a new suite of tools designed to make Bitcoin usable for everyday businesses, from coffee shops to local retailers. The platform will let merchants and small businesses accept Bitcoin payments, automatically convert a portion of their sales into BTC, and manage holdings in a built-in Bitcoin wallet, all from the same dashboard they already use for point of sale and banking. Pausing again, because that is always the most important point. If you're going to introduce something new to anybody, and in this case, to vendors, you cannot say, oh, well, if you're going to do this, if you're going to accept Bitcoin, well, we're going to have to install this, and you're going to have to hit this button, and then you're going to have to go over here and hit this button to make sure that, well, no, You're already lost. You've already lost that battle. It has to be under the hood. It has to be like taking your car in for I don't know, let's say you got a notice in the mail that says, hey, your transmission on your Chevy, we found out that it's faulty. So we're going to exchange it out. All you got to do is take it to the shop and we'll give you a brand new transmission or whatever it is. And you take it to the shop, they give you a loaner car, you go about your day and you come back and your car doesn't look any different and it drives the same, but it's got a brand new transmission. You didn't have to do anything. You didn't have to pay for it. You didn't have to get a voucher for it. Nothing. If it's not like that, then you can forget about Bitcoin payments. And that's why this Square Bitcoin was such a huge announcement. At least in my mind, I honestly think it should be in your mind too, but this is the way you handle user experience. You don't change it. If you do, you've lost. Continuing on, the rollout will begin November the 10th, 2025 with no processing fees for Bitcoin payments during the first year. Square says the goal is to make using Bitcoin as seamless as card payments, simplifying what has long been a complex process for small businesses. By integrating Bitcoin directly into Square's ecosystem, sellers won't need external wallets or third-party apps. They can choose to hold Bitcoin on their balance sheets or instantly convert it to dollars. Miles Suter, head of Bitcoin product at Block, said that the move aims to make Bitcoin everyday money. For merchants, it could mean lower costs and faster settlement than traditional card networks. And for Bitcoin, this news is just another step towards mainstream adoption. Bitcoin can be used as payments elsewhere. Popularly, Steak and Shake began accepting Bitcoin payments at all U.S. locations in May using the Lightning Network via QR codes on kiosks and point-of-sale systems. The move boosted same-store sales by roughly 11% in the second quarter, cut payment processing fees in half, and drove more customer visits, establishing Bitcoin as a strong alternative to traditional payments. So the first ever Square Bitcoin vendor customer transaction on Bitcoin has occurred, and it did so without the vendor having to change a damn thing. And again, I cannot reiterate this enough. When it comes to user experience, not changing an already tried and true unified user experience is critical. When you start mucking around with that kind of thing, again, you lost. You lost. And who's going to lose this one? Trump confirms that the United States is indeed in a trade war with China. So here we are. And this is why we're looking at 108 to 107,000 Bitcoin. Yep. We had another price drop. It happens, especially when markets are fragile. People's nerves are on edge globally, not just in the West, not just in the United States, but globally. Everybody's on the edge of a knife. Politically, emotionally, sociologically, if that's even a word. I mean, everybody's just poised to explode. Nobody knows what to do with their money, and everybody is realizing something's wrong with the money. Hence why you've got gold soaring to new all-time highs yet again today. But let's find out more from Braden Lindria, Cointelegraph. Donald Trump has confirmed the U.S. is in an active trade war with China after threatening a 100% tariff on all Chinese imports last week. Quote, "Well, we're in one now," Trump said after being asked by White House reporters whether the U.S. is preparing for a sustained trade war with China. Quote, "If we didn't have tariffs, we would be exposed as being a nothing. We would have no defense," Trump explained, calling the tariffs an important measure for America's national security. A social media post from Trump last Friday threatened the tariffs sparked threatening the tariffs sparked a crypto market crash that saw Bitcoin fall from $121,500 to $103,000 over several hours. Trump said that he would impose a 100% tariff on China after China tightened its export controls on rare earth minerals that are essential for building computer chips. Trump's latest comments haven't triggered a significant market sell-off. Kinda they have, but Bitcoin is up 0.1% over the last hour. Yeah, that's now changed. It's actually down from there. U.S. Treasury Secretary Scott Bessent criticized China's trade tactics earlier on Wednesday, claiming China's actions will backfire if they don't ease export controls. Quote, if some of the Chinese government want to slow down the global economy through disappointing actions and through economic coercion, the Chinese economy will be hurt the most. And make no mistake, this is China versus the world. We and our allies will neither be commanded nor controlled by a group of bureaucrats in Beijing, Bessent added. I won't explain why I'm about to say this, but the irony is strong with that statement. Anyway, Trump's tariffs on several Asian countries have, however, made it more challenging for U.S.-based miners to purchase ASIC Bitcoin miners. The tariff currently stands at 57.6% on China-origin mining machines and 21.6% on those from Indonesia, Malaysia, and Thailand, making it significantly more expensive than before. Last year, Bitcoin miners also ran into problems with the United States Customs and Border Protections, which seized thousands of Bitcoin miners under the impression that they were illegally imported radio frequency devices. Despite the issues, no major U.S. Bitcoin mining company has shifted its operations overseas, as some industry analysts anticipated. No, they're locked into their power contracts. It's more about where they're getting the electricity and the electrical infrastructure versus being able to get a hold of machines, because you can always rack up older machines. And honestly, this whole mining thing needs to be more decentralized than ever. But that's an entire different story that we probably don't have a whole lot of time for. So let's move on to CoinDesk. And Omkar Godboll is going to tell us all about the Paxos fat-fingered $300 trillion of PayPal stablecoin construction yesterday, outpacing USD's $2.4 trillion supply. Just nutshelling it. Paxos minted $300 trillion of PayPal's, what was it, PYUSD stablecoin. 300 trillion, not billion, not million, $300 trillion. The United States dollar only has a $2.4 trillion supply. It was a complete mistake, an error, but it brings up some obvious issues. On Wednesday, stablecoin issuer Paxos accidentally, note the word, accidentally minted $300 trillion worth of PayPal Holding Incorporated's PYUSD stablecoin on Ethereum, a fat finger error on the blockchain that far exceeded the total US dollar circulating supply of 2.4 trillion. Quote, at 3:12 p.m. Eastern Standard Time, Paxos mistakenly minted excess PYUSD as part of an internal transfer. Paxos immediately identified the error and burned the excess PYUSD, Paxos announced on X. The issuer explained that a technical glitch caused the PYUSD supply to rapidly and unintentionally expand, which was quickly identified and then resolved. Paxos emphasized that it was not a security breach and assured that all customer funds remain safe. Still, the fact that a technical issue led to such an enormous amount of stablecoin creation without the requisite collateral has raised eyebrows. Quote, it's not the dollar amount you should be thinking about. It's the fact that this is a collateralized asset that can be created without collateral. Let me read that again, because this is important for all stablecoins. It's not the dollar amount that you should be thinking about. It's the fact that this is a collateralized asset that can be created without collateral. I'm going to try to come back to that. At the time of writing, PYUSD ranked as the world's 7th largest stablecoin with a market value of $2.6 billion. Each token is fully backed by highly liquid, high-quality reserve assets to maintain its one-to-one peg with the US dollar. Fat finger errors have happened before in the crypto market. In 2019, Tether, the issuer of the world's largest dollar-pegged stablecoin, USDT, mistakenly minted and quickly destroyed $5 billion in USDT. Okay, so we've got some mistakes here. But let's go back. Let's go back to the sentence. It's the fact that this is a collateralized asset that can be created without the collateral. That's the problem. There's no hook to the peg. What do I mean? I can create stablecoin and it's not governed. There's no governor on the minting of that stablecoin using some kind of oracle like how many treasuries do I own? And even if there was that could clearly be easily manipulated. And this is sort of where the rubber is going to meet the road, because for over the last year, probably a year and a half now, I've been saying that Tether represents the poster child of being able to print an enormous amount, if not an unlimited amount, of United States dollars out of the United States and then ship that debt, because that's what it's going to be, debt creation, ship that debt to every other country in the world, and a little bit here, but moreover, it's probably going to be to every other country in the world, especially developing and third world countries, in the form of Tether. If at that point, Tether's just going to buy U.S. treasuries. That's what they're going to do. They're just going to print treasuries. Tether's going to buy them along with God only knows what else, more farmland, more gold, more Bitcoin, but it's going to be the treasuries. And they're going to be like the buyer of mid to last resort, in many cases, first resort too. They're going to have the entire spread. So the United States government will be able to sell freshly minted debt instrumentation in the form of treasury bonds directly into the global market. But then we have a disconnect, don't we? It's the fact that this is a collateralized asset that can be created without the collateral. In this case, the collateral is normally, against Tether, is a basket of all kinds of stuff, but a lot of it is United States treasuries. And we can print that shit at will. We already know that. Tether has real money, and they buy those treasuries with that money, and then they mint Tether. That Tether is collateralized in part, and to a great part, is collateralized against those treasuries, which we're already printing at will, right? And we already see weakness in the bond auction markets. There's a lot of people that really don't want to buy United States debt. Oh, that's okay. Tether will do it. But now we've got this extra little factoid going on that we really need to be wholly conscious of moving forward, is the fact that any of these guys, Circle, Tether, PayPal, Paxos, all these guys, whoever it is that's responsible for minting the stablecoin, can mint it because it's completely unlocked physically. In terms of code, like having the code, the minting code, whatever module in, like let's say Tether, when you go to mint Tether, it doesn't check against how many treasuries you actually own. If it did, again, it could be manipulated, but let's say it couldn't. That check doesn't exist, because if it did and it couldn't be manipulated, and I don't think there's a way that you could make it unmanipulable, because humans are humans and humans are going to human. It would say, oh, wait a minute, I can't print that many Tether. You only have this much in your basket of currencies and this many treasuries and whatever else is collateralizing it. Until you buy more treasuries, you can't print any more Tether. That's probably never going to be a feature, which means the printing and the minting of the stable coins are completely unbridled, and it will be up to humans to keep themselves in check. What could possibly go wrong? While you're asking yourself that question, you might want to go to oshigood.us. That's oshigood.us, oshigood.us, and get yourself some crunchy coffee hodl butter, which actually he's out of stock. He's out of stock on a lot of stuff, according to his website. That doesn't mean that he doesn't have good old-fashioned Oshi bars, crunchy coffee hodl butter, regular hodl butter. Oh, dude, and the crunchy coffee hodl butter, oh my God, it's so good. He sent me a jar and I was like munching on it. My wife cleaned me out of it for her morning toast. It was in the fridge for like 3 days, and I look at it and the whole jar's just gone. I got a spoonful. So the person that should really be talking about this is my wife, but she's not here right now. You can get hodl bars. He's got a banana chocolate chip hodl bar, a mint cookie hodl bar. What are they? I consider them energy bars. This is what I put in my backpack when I want to go on a hike. If I'm hungry out on a hike and I eat one of these sons of bitches, oh my Lord, I am charged up for at least another hour and a half. And he's also got something called BTHC nodes, which are chocolate covered hodl bars or little bits of hodl bars that are infused with THC. Yeah, I believe so. Yeah, THC. Probably not a whole lot. I haven't tried those, but this stuff is good stuff, man. And if you buy it, you're going to be buying it in Bitcoin. All right. So, because if you don't sell your goods and services in Bitcoin, you're not in the Circle P. Circle P is open for business. It's where I bring plebs with goods and services just like you to plebs just like you that want to purchase those goods and services, but you're going to do it in Bitcoin. And when you go to oshigood.us, use the code BitcoinAnd. BitcoinAnd is your coupon code. And he might give you a little bit off on that, but it's more about the value for value advertising model. I'm the only one that's doing it. It is a handshake agreement between me and Oshi. There's no contract. He doesn't pay me up front. He only pays me for sales that I make for him. And the only way he knows I made a sale for him is if you use the coupon code BitcoinAnd. Gold. Gonna have to talk about it. Peter Schiff is dancing on our grave. And as many times as I've told him directly, I respect him. You know, if you've listened to the show, you know I don't have a problem with gold. And yet, and there's a lot of Bitcoiners that have like a lot of Bitcoiners that have directly contacted Peter Schiff to say, hey, you know, we don't really hate gold. I mean, some people are acting a fool and saying bad things to you, but we're pretty much in alignment as to the fact that fiat currency is kind of screwed and a whole bunch of other stuff that Peter Schiff and Bitcoiners agree on. And yet Peter Schiff is it's bad sportsmanship. That's what I'm getting at. It's like the Texas Tech Kansas game. You want to talk about bad sportsmanship? Oh, Nelly, between knives and tortillas and everything else that the Red Raiders are accused of throwing onto the field. Well, we definitely threw tortillas on the field, but that whole knife thing, that actually ends up being a knife that we got video of it being chucked by a Kansas staffer on the sidelines. It's poor sportsmanship, and there's just no place for it. And I'm still going to extend the olive branch to Peter Schiff and say we agree on a lot more than we disagree on. We should probably work together, but he's just having too much fun right now, and I'm going to let him. But Micah Zimmerman from Bitcoin Magazine has this one. Gold will outshine Bitcoin as the new safe haven, says market researcher Ed Yardeni. I know. You're going, God, why are you going to read this to me? Because you need to know. You need to know what the sentiment is out there so that you can more easily navigate what comes next. which nobody knows, but at least you'll be armed with knowledge. Gold's massive rise this year is capturing investor attention, with market veteran Ed Yardeni declaring it the, quote, new Bitcoin. Nice little turn of terms there. Yardeni argued that gold has outperformed Bitcoin as a safe haven asset amidst growing geopolitical uncertainty. Quote, Bitcoin has been described as digital gold, but we would describe gold as physical Bitcoin, Yardeni wrote, highlighting gold's historical reliability compared with Bitcoin's shorter track record and risk-on behavior, Yardeni wrote in a Wednesday note from Yardeni Research. The numbers back up the claim. Gold has indeed surged 60% year to date, while Bitcoin's gains remain closer to 20%. In recent weeks, gold has rallied 4%, while Bitcoin has fallen 9%, and the NASDAQ has dipped almost 1%. Gold is currently priced at over $250 an ounce. 1 year ago, it was roughly $2,600 an ounce. The surge in gold today can be partially attributed to Trump threatening China with retribution over trade, including a potential ban on, of all things, Chinese cooking oil, amid long-standing tensions involving soybeans and other commodities. The escalation raises U.S. economic uncertainty, boosting demand for gold as a safe haven asset. Yardeni attributed Bitcoin's decline to liquidity strains, with around $19 billion in recent liquidations and leveraged positions, forcing some auto deleveraging and widening market spreads. By contrast, gold climbed after Trump hinted at 100% tariffs against China, reflecting its role as a geopolitical hedge. Yardeni sees gold pushing past 5,000 in 2026, potentially reaching 10,000 by the decade's end. Quote, investors seeking protection from mounting geopolitical risks have been heading for the hills to mine for gold as well as silver. Bitcoin has settled to near $111,000 this week, following a record high of above 126. And as you know, that price has fallen substantially today. It is what it is. I mean, it's not like we haven't seen this behavior before. People seem to be very upset about Bitcoin's fall over the last, since Friday, honestly. I even, and I'll admit it, I'm not immune. I'm not exactly feeling all chipper today either, but I've been here before. I've done this for 10 years. You'd think you'd get used to it, but you don't. And it doesn't help that longtime Bitcoiners will, and I'm pretty sure most of it's just tongue in cheek, but they'll make posts, whether on Nostr or on Twitter, and it's somebody that you know and love and respect in the Bitcoin space, and they'll say shit like, it's so over. You might think you're being tongue in cheek, but it's actually not helpful, because it adds to a general psychology that people are picking up. And when you add to that, even if yours is tongue in cheek, you got to remember it's stacked between two tweets. One is Peter Schiff saying, see, I told you. And the other one is some other Bitcoiner who's showing you longs getting blown out of the water and telling you how they're now switching to Zcash, which has been a trend over the last few days. It's a scam trend, but it is a trend. But when you do that, you're just adding fuel to the fire. You'd have to be, if you want to do that, then be very specific that you'll say something like, it's so over, and then in parentheses, oh, bullshit, or I don't know, something that demonstrates that you don't really mean it, because right now, like I said earlier, the whole world is on edge, economically, politically, financially, sociologically, whateverly. It goes on and on and on. Nothing has escaped the fear, uncertainty, and despair that the world feels right now. It's just out there. If you want to help, don't say shit like it's so over, even if you're just kidding. And if you are kidding and you do want to do that, then say you're kidding. It's not that freaking hard, people. Let's run numbers. CNBC futures and commodities stocks have given up the gains and they trade lower. Dow is down 300 points. That's breaking news from CNBC.com. Meanwhile, Brent North Sea is down over a point to 61.27 a barrel. West Texas Intermediate crude is down a point to 57.71. Natural gas is down 2.12%, back below $3 per thousand cubic feet. Gasoline is down 1.2% to $1.81 a gallon. And Murban crude, everybody's favorite light sweet crude, is down a half point to 63.25. And as you might imagine, shiny metal rocks are doing very well today. All of them except copper, which is down a half point. Palladium is up 5%. Gold up 2.14% to $4,291. That's a fresh new all-time high. Platinum is up 3.5%. Silver is up 3% to $52.84 an ounce. All of ag is in the green today, except for coffee. Only loser, 0.67% in the red. The biggest winner today is chocolate, 3% to the upside. Lean cattle is up a quarter. Did I say lean cattle? I'm sorry. Live cattle is up a quarter. Lean hogs are down 1.14%, and feeder cattle are up a quarter as well. And the rest of all the legacy indices are sucking swamp water today because, trade war. S&P is down a half point. NASDAQ down a third. Dow is down a half point. And the S&P Mini is down almost 1 full point. Meanwhile, we're chilling out at $109,060. That's a $2.17 trillion market cap. And now we can only purchase 25.2 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,935,282.42 of. I'd like to see Peter Schiff tell me exactly how many ounces to 2 decimal places there are in the world. He can't do that. I'm able to tell you to decimal places every single weekday how much Bitcoin is in circulation. Average fees per block are low, 0.02 BTC taken in fees on a per block basis. About 20 blocks carrying 45,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low priorities will get you in at 2. Holy moly, hash rate, it's a row of sticks, 1.11 zettahashes per second. It's an all-time high for hash rate on the Bitcoin network. It's all the security that you can use from Nanny Binance. Yesterday's episode of Bitcoin and I got God's Death with 237 says, thank you, sir. No, thank you. Tulips 200 says tulips. I guess Bitcoin is just tulips and it's going to 400 years of prosperity. Got a little question mark in there. Pies with 121 says, thank you, sir. No, thank you. And God, that's it. That's all I got, man. Come on. Give me the boostergrams. You got to support the show. I do this for you guys. If you do find value in listening to what's going on a daily basis in the Bitcoin and the wider Bitcoin world, then consider donating to the show, either through Zaps, on Nostr. You go use Podcasting 2.0 based apps and you can stream me Satoshis. You can give me boostergrams. There's many other ways to do it. You can even go to the my website, bitcoinandshow.com. That's bitcoinandshow, all one word.com, and sign up. Just, it's like $50. You can sign up for free, but if you want to support the show, I've got a tier that gives you, it basically gives you everything everybody else gets, except this way you show that you support the show. It's $50 for a year. Is that, for the whole year. It's not $50 a month. It's $50 for the year. And it's just so that you can show your appreciation if you are in fact getting value out of this show. And if you just don't have any money or don't want to part with your Bitcoin, if you can part with some of your time and throw me a 5-star review on Apple Podcasts, that actually does help. It really does. Every single time I get a new review, I see a bump in listenership. So if you got no money and you're living under a bridge, but you got a cell phone, well, throw me some love over there on Apple Podcasts. That is the weather report. Welcome to part 2 of the news that you can use. Tether donates $250,000 to OpenSats to strengthen free and open source ecosystems supporting Bitcoin and freedom tech. And this is directly from tether.io's blog. Tether, the largest company in the digital assets industry, today announced a $250,000 donation to OpenSats. It's dedicated to funding contributors and projects that strengthen Bitcoin and advance open censorship resistant technologies. The donation will support OpenSats operations and grant-making efforts, enabling continued financial support for a wide range of free and open source initiatives, from protocol development and privacy tools to research and education. OpenSats allocates 100% of funds directly to grantees, sustaining its operations through separate donations, maintaining its transparent public interest mission. Quote, "We at Tether believe that Bitcoin and the free open source software that powers it are indispensable to a freer, decentralized future," said Paolo Ardoino, CEO of Tether. Quote, "OpenSats is on the front line supporting the continued growth of this ecosystem by funding the next generation of innovators, and we are proud to support their work," end quote. OpenSats was established to create a sustainable, transparent funding model for contributors to Bitcoin and free and open source software. Okay, so I believe Tether has donated to OpenSats before, but I'm not quite sure. However, Jack Dorsey replied to the tweet from tether.io, announcing this donation to OpenSats, and he literally said one sentence: "Why only $250,000? Oh, burn it to the ground, buddy." I don't know. I mean, we should never look a gift horse in the mouth. It is $250,000 that OpenSats did not have before to support free and open source software development, as well as Bitcoin and nostr and all kinds of other stuff. But how many billions of dollars did they make last quarter? I mean, honestly, $250,000 is kind of like spitting in the wind. But hey, again, never look a gift horse in the mouth. Have you lost your Bitcoin in California? Well, you might get it all back, according to Aaron Wood out of Cointelegraph. Over the weekend, California Governor Newsom signed a bill into law that preserves abandoned Bitcoin holdings. The bill was an update to unclaimed property law and contained one key provision: abandoned Bitcoin or crypto holdings that are transferred to the state must be maintained in their original format, not sold for cash, for a certain amount of time. States with similar laws require that crypto be liquidated into cash immediately. This can create difficulties for recovering lost property and also creates administrative burdens for exchanges and crypto custodians. The new law in California reflects growing adoption and understanding of cryptocurrency among lawmakers. It may also influence how other states choose to regulate crypto in the future. State governments use the escheat, the reversion of property to the state, and the sale of abandoned property as a revenue source. As cryptocurrencies become more popular, states are increasingly amending their unclaimed property statutes to allow state administrators to take control of these assets as an untapped source of revenue, wrote attorney Casey Arntzen in the Iowa Law Review. On October the 11th, Newsom signed SB 822 into law. In doing so, California joined Delaware, Illinois, Kentucky, and New York as states that have included crypto in their laws surrounding abandoned property. The law, which passed unanimously, represents a critical update to the decades-old UPL legislation that was already on the books. The new code stipulates that crypto is considered abandoned if it sits in an exchange or custodian account for 3 years without any action. These actions include deposits and withdrawals, trades, logging in, other actions that, quote, reasonably demonstrate the owner knows they have crypto in the account. This initially raised concerns among crypto observers who were under the impression that the state was out to steal their crypto. One invoked the crypto slogan, "Not your keys, not your coins." Others thought the state could somehow transfer crypto from your wallet and then sell it. Notably, the law only applies to custodial platforms. Non-custodial wallets remain unaffected. Yes, again, not your keys, not your coins. Even then, the custodian must provide notice no less than 6 months after the state deems the property abandoned. The California law sets itself apart from other states in the abandoned Bitcoin or in that abandoned crypto or Bitcoin need not be converted into fiat currency. Instead, it will be turned over to a state-appointed custodian. Ooh, yay. State-appointed custodian in its original form. In other states, abandoned and escheated Bitcoin is immediately converted into cash. Once the state has the crypto, it can only sell it after 18 months if it deems it necessary or beneficial to do so. Crucially, this will allow investors to receive their Bitcoin back in full if they claim the abandoned property. Eric Peterson, policy director for the Bitcoin advocacy group Satoshi Action Fund, said, quote, "The state will send you your Bitcoin back in Bitcoin rather than liquidating it years ago and sending it in cash." Cryptocurrencies and blockchain technology have often butted up against outdated legislation. Simple inclusion of crypto under existing umbrellas don't always provide legal certainty and can even in some cases make things murkier. As noted by a team of lawyers at Jones Day in Chicago, Illinois, the local state law pertaining to abandoned crypto represented, quote, "an administrative burden for crypto custodians and may be unwelcome by long-term crypto investors," end quote. Illinois law and the laws of many other states require immediate liquidation, which undermines the custodial nature of crypto. The counsel at Jones Day stated, quote, "While owners can still collect their value, that value is now fixed and finite, unable to ride the ebbs and flows of the market," end quote. This will likely result in a headache for the state, investors and custodians alike. By law, investors are entitled to the value of the crypto when sold, but are not allowed recourse to recover any increase in value after it is sold. Still, it is unlikely that this will dissuade legal action by the angry owner of crypto that increased tenfold since the date of liquidation, and per historical trends, owners will not stand by as docile observers when a holder liquidates his or her crypto. Artisan also stressed that lawmakers need to bring their administrative capabilities into the modern age. She recommends that states hire outside expertise to create the necessary wallets and custodial capabilities to store crypto. She also said the state could use an exchange like Coinbase to liquidate its cheated assets. Cheated. I was cheated out of my Bitcoin. The cryptocurrency industry has achieved several policy victories in the U.S. over the last year. Stablecoins have clearer laws, and Congress is working on the massive Responsible Financial Innovation Act, the market structure bill for crypto. However, at the state level, progress is moving in fits and starts. So, boys and girls, what are we really saying here? If you leave your Bitcoin on an exchange and not touch it, but also not log in, not remove it or not add to it, then after 3 years, it's going to be considered abandoned property. Who gives anybody the right to do that? I mean, why 3 years? Why is it not 10? It's a completely arbitrary number, and it seems a little bit light in the loafers for me, insofar as it should be a heavier amount of time before they start making decisions for you, the actual property owner. I understand where the sentiment comes from. What if somebody died? I get it. But honestly, the state should have no ability to collect personal property because of insta-rule. You know what? Maybe we should just make it to where if somebody doesn't touch their stuff in 3 years, we can just take it. Yeah, that sounds like a good idea. Hey, let's get a law going for that. That's an insta-rule. There's nothing pressing in the world that says if we don't do it, nuclear holocaust is going to happen, or massive pandemics will sweep the earth, or mass starvation will occur, or all the blue whales in the ocean will die. Nothing was going on. It was literally the meme where it's like, nobody. Me. Hey, let's make a law to steal people's property after 3 years of inactivity. We've got to be able to stop and point at something and say, that's not right. And this entire escheatment is not right. If property goes abandoned, too bad. It's not the state's. I'm not going to say right. What I'm going to say is it's not in the interest of the state, other than getting free money or free property. It's not in the interest of the state to have a mechanism to just arbitrarily say, hey, you haven't logged into your bank account for 3 years, so we're going to take everything in it. It's just ridiculous. As is the UK. But they may be making the correct decision here. I'm not sure. We'll find out from Ryan Gladwin out of Decrypt. UK aims to repay Chinese victims of $7 billion Bitcoin fraud. Prosecutors in the UK are planning to repay the victims of a nearly $7 billion Bitcoin fraud in China, despite the UK government previously signaling its intention to keep most of those funds. In September, Chinese national Zemin Qian pleaded guilty to acquiring and possessing criminal property in the form of Bitcoin valued at $6.8 billion. Qian, however you pronounce it, gained the funds through a fraudulent investment scheme that duped upwards of 128,000 individuals in China between 2014 and 2017. Over the years, she converted the illegally obtained funds into Bitcoin and attempted to launder the assets. The Metropolitan Police seized the stolen Bitcoin from 2018 to 2021 after Qian fled China and entered the UK with false documentation. Over the last few weeks, questions have abounded over what the UK government plans to do with nearly $7 billion in Bitcoin. Germany, for instance, sold billions of dollars worth of Bitcoin last year that had all been seized from various investigations. By contrast, the U.S. government still holds $37 billion worth of seized assets, and lawmakers in the country aim to use them to create a digital asset stockpile. After initially signaling an intention to keep most of the Bitcoin, prosecutors in the case today said during a court hearing that they are planning a victim compensation plan. According to Bloomberg, several investors have reportedly applied to the court to reclaim their money. Some investors have suffered huge personal losses in the form of lives, marriages, fractured families, and businesses. William Glover, a lawyer for the group of victims, told Bloomberg. Prosecutors have yet to provide specific details on how the compensation scheme will work. Quote, given the unprecedented scale of the seizure and public debate about any potential surplus, our position is clear. Victim restitution must come first, Jackson Ng, a lawyer representing a set of investors, told Bloomberg. Nick Harris, CEO of UK-based crypto asset recovery firm CryptoCare, warns, however, that victims could be disappointed by the final result. Quote, the UK could still retain the seized Bitcoin under the Proceeds of Crime Act rather than redistributing it directly, Harris told Decrypt. Quote, typically, confiscated assets are channeled into the Treasury or law enforcement budgets through the Asset Recovery Incentivization Scheme, a system mirrored in the US and Australia where victim restitution is not always prioritized. So it's still unclear as to whether the people that lost their Bitcoin are going to get their Bitcoin back, and will they get it back in Bitcoin, or will it be liquidated and then they'll be given the fiat? Who knows? Because it's just unknown. This is all kind of like new territory for all of the people in government. And it's kind of fun to watch them fumble, but it's not fun to watch people lose marriages, lives, families, and businesses because of their own fumble. Just be very careful, people. Pig butchering is real. right? I talked about that yesterday. The scam like the one that she was running in China, those are real. Just if you get a text on, like what I've been getting on my phone lately is the following. Your Coinbase account has been accessed by some device in Singapore. If this was you, or if this was not you, then call this telephone number, and it's like an 888 number. Don't call that number. Coinbase is never going to text you to tell you this. I mean, if something like that had happened, you would not get texted on your phone. Let's just put it that way. All right. That's not the way Coinbase is going to work. My sister has called me 3 times in the last year to ask me about a particular text message in in 2 cases, and then an email she got in another case. All 3 of them are scams. They all say the same stuff. Your Coinbase account has been accessed by X. And if this was not you, call this number. Don't do that. That's how you get scammed, right? If you, for whatever reason, if you get one of those texts and you're concerned, call Coinbase directly. Do not call the telephone number that was listed in the alert, because it's 99.99% chance it's always going to be a scam. All right, just be careful out there. Meanwhile, OKX expands custody partnership with Standard Chartered into Europe, letting clients trade while keeping assets off of exchanges. This is The Block, written by James Hunt. Crypto exchange OKX has expanded its custody partnership with Standard Chartered into the European Economic Area, introducing a model that lets institutional clients trade on OKX while keeping their assets in the bank's custody. The move extends a program first launched in the UAE earlier this year, creating a barrier between trading and custody that is standard practice in traditional finance, but not so in crypto. Traders have been seeking to mitigate the risk of holding assets on crypto trading platforms in general following the FTX debacle of 2022. Through the collaboration, institutional clients can hold assets with Standard Chartered, a global systemically important bank, while mirroring those balances on OKX for trading. This approach is designed to reduce counterparty risk and give clients the ability to access liquidity and trading opportunities without transferring custody of their assets to the exchange. The model offers bank-grade security with direct access or with direct exchange access, allowing clients to trade within a more protected framework. OKX Europe CEO Harold Goose said in a statement, adding that OKX's MiCA license provides the regulatory clarity institutions need to deploy capital confidently. Quote, the expansion highlights not only Standard Chartered's confidence as the first and only GSIB, which I guess is globally systemically important bank, to work directly with a crypto exchange, but also the growing trust of regulators in this model. Margaret Harwood Jones, global head of financing and securities services at Standard Chartered, said that the combination of the bank's established custody infrastructure with OKX's regulatory framework will deliver secure and compliant solutions for institutional clients in Europe. OKX previously partnered with Komenu to provide a similar custody arrangement for institutional clients in 2024. However, it's not the only crypto platform looking at such off-exchange solutions, with Deribit, Binance, and BitGet also announcing plans in recent years. And I know that the word crypto was bandied about a lot, and as you know, if you've listened to the show, I don't think anybody should trade this stuff. But people are going to trade this stuff. And it is better for them to trade this stuff if the actual underlying assets that they're trading against each other are held off of the exchange. It's better for everybody, including even those of us who don't trade in this garbage. Because shockwaves that could potentially happen with another FTX, Alameda, BlockFi debacle are lessened to a great extent. And right now, since everybody is jittery and on edge like a beast, it's probably a good thing that this is occurring. And I'm glad to see that these other exchanges are looking for partnerships that mirror that. Last up for the day, Strive's crypto merger with Semler Scientific faces a shareholder revolt. Wow, they're revolting over there. Cointelegraph's Amin Hasquanis has this one. A shareholder of healthcare technology company Semler Scientific filed a lawsuit seeking to block the company's proposed merger with Strive, the asset manager turned Bitcoin treasury company led by former U.S. President candidate Vivek Ramaswamy. According to the complaint filed in the U.S. District Court of the Northern District of Illinois. Wow, it's not in the Southern District of New York. It's surprising. Plaintiff Terry Tran accused Semler Scientific and its board of directors of violating sections 14A and 20A of the SEC Act of 1934, which bans misleading shareholder voting materials and holds company leaders liable for those violations. Quote, the registration statement is materially incomplete and misleading with respect to the financial impacts of the proposed transaction on the combined company and the financial fairness of the proposed transaction, the complaint read. Under the deal announced in September, Strive, an asset management company that recently merged with asset entities to become a publicly traded Bitcoin treasury company, plans to acquire Semler Scientific through a stock-for-stock transaction. Shareholders of Semler Scientific would receive 21.05 shares of Strive's Class A common stock for each Semler share that they own. Tran's lawsuit claims that the Semler board, including CEO Douglas Murphy Chatorian and directors Eric Semler, William Chang, and Daniel Messina, failed to disclose sufficient details about the financial fairness of the deal and its implications to shareholders. The plaintiff is asking the court to halt the shareholder vote or any steps towards completing the merger until the company issues corrective disclosures addressing the gaps in the proxy statement. If the deal has already been executed, Tran seeks to cancel the merger or obtain monetary damages. If the court grants the injunction, the merger could face significant delays. The case, filed on Tuesday, is being handled by Ademi and Fritcher, a Wisconsin-based securities litigation firm. Semler Scientific is a health tech firm that adopted Bitcoin as its primary treasury reserve in 2024. Yes, we know, we get it. Let's see if there's anything else about the, and that's it. That's about all that is worthy of that particular story. So, shareholder revolt over there at Semler Scientific. They don't seem to be particularly happy about the merger. We'll have to see where that goes, but yeah. Everybody calm down. Seriously, everybody calm down. Injecting negative sentiment into something that is already negative is not helping anything. If you want to post to whatever it is that you post to, post a picture of flowers or something. I don't know. But this entire, like my X feed is completely different than my nostr feed. You know what's going on over at nostr? People are posting pictures of what they ate today, what meals they cooked. I've got a really good artist over there, Isabella Art. Isolabella Art is over on nostr. He's posting pictures of his oil paintings, which are gorgeous, and you should buy one if you can get a chance to do that. I've got people that tell, like with, I don't know, positive thoughts. Now, if I go over to X, all I see is it's the meme with the two people on the bus. The guy on the left-hand side of the picture is looking at the brick wall outside of the windows of his bus, and the guy on the right-hand side of the picture is looking out at the sunshine, the sun setting over this beautiful mountain scene because he can see out. It is night and day difference. I feel bad for the people that are over on X because they are literally being fed shovelful after shovelful of negativity about everything, and in particularly today about Bitcoin. So just be careful and think think before you post. Yeah, I sound like the UK. Just, be sensitive. People are freaking out, man. They are really freaking out there. And there's just no reason for them to freak out this bad. We've been here before several times. And if you've been here in the game as long as I have for a decade, it was a decade last September for me, then you've seen all this and much, much more. Oh, and by the way, so Bitcoin didn't die on October the 10th when what was released? V30. And everybody's still freaking out about that. It was supposed to just stop Bitcoin in its tracks if you listen to anything on Twitter. And in that case, in the V30 case for Bitcoin Core, the version 30 stuff was also on nostr. There was, I was getting it from both directions. This time, nostr is actually the clean slate that I can go to take a deep breath. And X is where I can go doom scroll until the day that I die if I want to, at least about Bitcoin. So just be aware that version 30 didn't kill Bitcoin. The downturn in the market that we're seeing right now and Peter Schiff dancing upon our graves, we've been here before. If you go look at the gold versus Bitcoin chart, you'll see that we've been here twice at this over the last 3 years. This is the third hump after a deep dive by gold against Bitcoin. The value of gold shrunk against Bitcoin for since whenever they started doing that trading pair, at least on TradingView that I can see, just plummeted to rock bottom, man. And then we got a little hump that came up, another little hump that came up, and then another little hump, which we are on at present. And every single time at the tippy top of that hump, you got Peter Schiff just dancing on our grave, and all of the hardcore Bitcoiners are like, but Peter, we actually like you. We're not exactly against gold. I mean, it's like those are sort of the Bitcoiners that I have a lot of respect for, are those that instead of just saying Bitcoin is the only thing ever and everything else cannot have a place, most of the guys that I trust say, well, Bitcoin and gold, and raise a family, eat good food. I mean, these are all good things. And when I mean good food, I mean like good for you, like nutrient dense. Eat meat, stop eating like nothing but pasta all day long for 5 days a week. This shit's bad for you. Yeah, these are all good pieces of advice, and there's no reason to think that any one of them means that you hate all the rest of them. Right? So just take a break, go outside, touch grass. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.